My next guest says that actually, because of all the red, there's a lot of buying opportunities out there. Michelle Snyder, no one covers a wider breadth of assets than she does, so I can't wait to see what's on her shopping list. She's next. All right, here we go. All right, folks, there's a renewed emphasis on diversification within and outside of the stock market, right? You think in the market, there'll probably be new leadership and, of course, people looking for assets outside of equities. Well, my next guest canvasses the entire investing world. She's always finding amazing opportunities. Let's bring in Market Gauge Managing Director Michelle Snyder. Michelle, first and foremost, I'm going to ask you what I ask everyone else so far. The sell-off, what do you make of the sell-off? And you've seen a few of these things. I've seen a few of them. How do you match it up?
Well, I think there's one distinctive difference between this sell-off and some of the other ones we've seen in the past, in that we have a very multifaceted level of uncertainty and concern. Tariffs, of course, were the catalyst to bring us down, but there were a lot of uncertainties that were already happening even before this, and particularly if we're looking at the consumer sector, that was really giving us clues at first about monetary policy, about government spending, about debt, about people feeling the pinch of...
I want to pick up on that because, the jobs report was, came in too strong for Powell to get aggressive, but then if you look into it deeply, it was okay. The point, though, is, to your point, the consumer was certainly slowing down. The momentum was slowing coming into this year, and that's getting sort of glossed over. Is that something that could maybe, in your mind, get the Fed to move sooner rather than later?
I think that would be the key, actually, and that's where you'll see the dot plot. It shows up in CPI, PPI, because if things are too expensive or people are cutting back in spending, obviously those numbers are going to be impacted. And also, I think that the Fed is saying right now, no recession, but the consumer is certainly acting like one might be inevitable.
I think if you take out the top 10% who are doing 50% of the spending, it's already there for the rest of the folks out there. And now, with the top 10% looking at their portfolios, they're going to pull back. So I think the Fed's going to be shocked by some of this data. Let's talk about the granny indicator. Because in your notes, they said the granny indicator. I'm like, well, what's going on with granny?
Well, it's what I call the consumer sector through the ETF XRT, which is a really nice blend of staples and discretionary. And the reason why I call granny is because, first of all, 70% of the GDP is the consumer.
Right.
And B is I had a grandma that couldn't really walk very well until she hit a department store. Then all of a sudden...
little pep in the step?
Yeah, so it's named after her. But yeah, back in January, while people were still very bullish, XRT was already starting to fail on the charts.
Right.
The 50-day and then the 200-day and then the January range. And now today, interestingly enough, it's holding best. So it could be that some of the uncertainty is being absorbed and possibly resolved with the news about Vietnam today.
Right, so the Vietnam thing, President Trump saying there was a really good negotiations. Automatically, we saw these retail names make huge intraday reversals, and I think that's a good template for the rest of the market once this thing is resolved, because I think folks are going to be kicking themselves not buying into this weakness, even though it feels painful. You have a way people should be approaching this, because the question is, what do you buy?
Exactly, and I know that there's a lot of focus on AI and robotics and all the rest, but I think right now it's probably best for people to look at things that are actually consolidating. What I mean by consolidating is in this last couple of days of the flush, there are a few stocks that have held the lows and are ranging. Tesla would be one of the examples for, as people love Tesla. I'm very pleased to see it's trading between like 240 and 260, 280, really more of a bigger range. It's a big stock. But nonetheless, that's one. Intel's holding $20. Ulta's holding $350. IBM is holding at about $230. So if you look at Etsy, is holding $45 in the consumer
So these are
space.
names that are holding serious support points where everything else, including these major indices, are breaking down big time.
Exactly. And we can add blockchain, by the way, and also Bitcoin to that list, which actually is holding incredibly well, which could be an early indication that we're seeing some sort of departure as a risk asset into something more of a safety, which would be extraordinary.
So I just got a few seconds, but I want to give you the final word to people that you hear at the attending here, and also folks who get your research. What are you telling them with respect to being calm and also at the same time considering being opportunistic?
Well, I do believe that once we see things settle down a little bit, and we will, I mean, we're getting pretty close to some major support levels. And once we see, let's go back to Granny. It's really pretty simple. Granny has to really hold here, XRT, and that will show some level of confidence coming back. And then in terms of the overall market, I think what you want to see is a good up-day volume.
Right. A strong day, better than average volume. That's one of the first signs.
Exactly. Follow through the next day you're in, you've got a great risk.
Great stuff.
All right. Thank you, Charles.
Thank you. All right, folks. Michelle Snyder.